You make a choice. You work a job. You spend your money. You believe you're free. But what if every single decision was already made for you? By a small group of people in a room you will never enter. This isn't a conspiracy. This is modern economics. This is the silent war being waged not with soldiers, but with policy. A war where your savings, your job, and your future are the battlefield. To understand this war, let's go back to 1913, the year the Federal Reserve was born. Not a government agency, but a unique, some say private institution. Its weapon? The interest rate. Think of the economy as a giant seesaw. On one side, savers, on the other, borrowers. The central bank's job is to control the fulcrum, the interest rate. Lower it, and borrowers are flung upward, encouraged to spend and build. Raise it, and savers are rewarded, but the economy slows. This is their primary lever of control. But in 2008, they unveiled a new, more radical weapon: quantitative easing. A complex term for a simple idea: creating money out of thin air. They don't literally print it. They click a button. Billions, then trillions, appear digitally to buy bonds. This floods the financial system with cash. Part 2. The asset river. Here's the catch. This new money doesn't get handed to you. It goes to banks and financial institutions. It floods into assets, stocks, bonds, real estate. This is why, after every crisis, the stock market roars back while wages stagnate. The wealthy own the assets. You own your labor. Part 3. The Cantillon effect. Economists call this the Cantillon effect. New money has a destination. The first to get it, the banks, the connected, spend it before prices rise. The last to get it, you, when you finally get a raise, face already inflated prices. You're not just left behind, you're paying for their party. The turning point is now. We live in the permanent aftermath. The silent war has clear winners and losers. Asset owners see their net worth explode. Everyone else fights over scraps in an economy where everything feels more expensive. This policy creates a hidden tax, inflation, that erodes your purchasing power silently every day. It fuels inequality not through malice, but through mechanics. It determines which neighborhoods gentrify, which industries boom, and which generation can afford a home. It even influences elections, as politicians rise and fall on the economic mood the central bank helps create. The unsettling truth is this: we have traded the visible hand of the king for the invisible algorithmic hand of the central banker. Their mandate is stability, but their tools reshape society. They aren't evil. They're technocrats playing a high-stakes game with the most complex machine ever built, the global economy. And you are not a player. You are a variable in their equation. The lesson? True financial literacy today means understanding not just stocks and bonds, but the tides created by those who control the money supply itself. Final CTA. So I have to ask, when the next crisis hits and they decide to click the button again, who will win the next battle in the silent war and who will lose? Let me know in the comments.